Welcome back. Now, the strategic shift towards fintech continues to pay off for Weaver Fintech. At the full year mark, the group's top line grew by 23% to 5.5 billion rand. This growth trickled down to the bottom line as well, with headline earnings per share jumping by 40%, driven almost entirely by the continued performance of the firm's fintech business. A final dividend of 132 cents was declared, bringing the total payout to 2.72 rand. That's a hike of 42%. The company's CEO, Sean Wibberley, joins us now for his take on the performance. Sean, hi, good to chat to you on Business Lunch. I mean, this is a phenomenal shoot forward. Talking about Just Pay Now, take us through the growth of that, because you guys certainly have, like I said, just leapt forward.
Yes, thank you. Thanks for having me on your show. Pay Just Now, our buy now, pay later product, has had tremendous growth. We launched the business, we acquired the business as a startup 5 years ago, and it's growing from strength to strength. We're adding about 120,000 new BNPL customers every single month. And we have about 4 million now as at the end of the year. And yeah, that product is a very virally adopted product. It enables customers to pay at the till for free in terms of splitting the payment 3 ways without paying interest or fees. So it's a great payment product for distributing affordability over a couple of payment cycles, making things more affordable for our customers at the till. So customers are coming into our merchants, signing up for our ecosystem, and then we march those customers into our other product lines once they've proven themselves.
Yeah, see, that's interesting. But how do you handle 120,000 new customers a month? The logistics must be massive on that.
Well, it's run by our tech platforms. So we've integrated into 3,500 merchants. Many customers either come to those merchants and see Pay Just Now as a checkout method and then sign up digitally in the flow, or they come directly to our app through word of mouth and they sign up that way. So it's all done digitally. The customer signs up, gets a limit assigned to them on a low and grow basis, and then they can make their first purchase both in store or online using Pay Just Now as the checkout method.
Yeah.
And so our customers are largely female, she would pay exactly 1/3 at checkout, and then a third a month later and a third a month after that. So spreading the payment over time. And the merchant themselves pay us a commission for that. The customer pays nothing incrementally more. The merchant gets that customer, they get that conversion, they get that higher basket size. And we, of course, earn a revenue share from the merchant by way of commission.
Sure. What have you noticed when it comes to consumer behavior? Because you said you get your customers in and then you take them onto other products as well. You've got insurance as well, other things as well. But what have you noticed with consumer behavior? Are people paying their bills? Are you able to convert to your other products?
Well, yes. I mean, the Pay Just Now product itself has a very low bad debt rate. Less than 2% of the gross merchandise value ends up being debtors cost, which is extremely low across any form of deferred credit product. So the customers come in, we look at their behavior on that product, and then we can offer them pre-approved lending products where we qualify the customer based on their bureau record, their behavior in our ecosystem, and we serve up offers on a low and grow basis for our credit. Customers can then access a digital wallet or a term loan, which is a form of cash credit, and over time build up their profile with us where we would offer them larger or longer term loans.
Yeah.
And then, of course, the insurance products don't have credit risk attached to them, and we offer funeral and personal accident, which are very well-known products in the market. And we sell those on our digital platforms to pre-approved customers, just leveraging the equity in our platform to give customers the eyeball, so to speak, for those offers, and then sign up for insurance.
Let's take a look at your growth. I mean, you're working now with ShopRite, others as well. Like I said, you've done these massive leaps forward. What happens next?
Well, this is we're calling this the year of the merchant for 2026. We want to radically expand the number of merchants we have in our books. We have 3,500 now approximately integrated into our portfolio. And a number of large tier one merchants, as you've mentioned, ShopRite, Take a Lot are good examples that joined us at the end of last year. We're looking to add a few more of the major household brand merchants, but also rapidly integrate smaller online and in-store merchants. I'm looking to add at least 10,000 new merchants this year. So to really bring the other side of the two-sided ecosystem into force. We've got 4 million customers, we've got 3,500 merchants. I want that to be closer to 15,000 merchants, which then gives you that ability for customers to find what they want in the merchant side, merchants to find more customers, and get that flywheel really working.
Yeah, we've spoken all about Pages Now, which is fine. What about your other areas as well? There's insurance, there's home choice, there are other areas too. How have they been performing? I know the bulk of it is your fintech.
Yeah, I mean, on the fintech side, we've got the 3 core verticals of lending, payments, and insurance. Payments is the acquisition vehicle for the group. Because of that viral product, it's costing us about 57 Rand to land a new customer into the ecosystem. And as I've mentioned, we cross-sell into lending and insurance, and we're going to deepen those verticals with other types of products within each of them. We are then later this year going to be adding our own mobile network called Pages Now Mobile, or PJN Mobile for short, where we've got 4 million customers. We believe we can give them data and airtime packages at much more affordable rates, and also give them free access to data and airtime based on their positive engagement in our ecosystem.
Gosh, Sean, yeah.
And then early next year, we're going to launch a bank-linked Visa or MasterCard. We're going to partner with one of the major banks in South Africa in order to offer a linked credit or debit card to our credit products, thus further facilitating her ability to make payments at the till using, for example, a virtual card and a tap and go on her phone.
Wow.
So really exciting growth in the fintech space and a lot of trajectory. We've only got about a 2.5% share in unsecured credit, 1% share in insurance, and just under 2% in digital payments. So there's a lot of growth potential. Some research is showing that BNPL is set to double in 2026 in the South African context, and we, as the biggest BNPL in the country, are well positioned to take advantage of that.
Sure, we'll have to leave it there, but those are phenomenal results and a great plan ahead. I look forward to chatting to you in future on Business Lunch. Thank you so much, and congratulations. Thank you. That was Sean Wibberley, CEO of Weaver Fintech.